Nvidia just reported earnings, and unfortunately, after hours, the stock is down roughly 3%. This must mean earnings were bad, right? Right? Well, on today's episode, what I want to do is kind of take a closer look at why I'm still extremely bullish at this company that's worth $4.4 trillion. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so just a quick price action. Like I mentioned, right now, after hours, the stock is sitting at $175.90, down about 3%. Now, my too long don't watch, if you're worried about that, is bullish on the company long term. I personally believe tomorrow we're going to see price target upgrades on Nvidia from various analysts due to the great earnings that they had. And kind of once analysts start to look at some of the numbers that I'm going to be discussing in today's episode, but earnings as a long-term investor continue to solidify why this company can continue to be a market beater. So I'm not worried at all for this drop. I don't think this is a massive buying opportunity. Either 175, 3% drop is nothing crazy, but I'm definitely not selling. I'm definitely not locking up any profits. I'm not buying. Still long-term holder, as I do believe the AI era is going to continue to dominate. Now, on the top line, NVIDIA does beat on top line and bottom line numbers. That's definitely great. So we did see a beat. And I want to say guidance was actually pretty impressive. Now, what I want to start off is just some of the kind of important information. $46.7 billion in revenue, up 6% from a quarter ago and up 56% from a year ago. Data center market was pretty much in line with that as well. Now, there were no H20 sales to China based customers in the second quarter. Now, one thing that they did mention during this earnings call is that they were actually able to sell H20 to other parts outside of China, which I thought was pretty interesting there. Now, the other thing is we are seeing kind of a nice approval with an additional $60 billion to company share repurchase authorization without expiration. So the company right now is doing a nice amount of buybacks. Now, one of the things that really get me excited is this. If we look at gross margins was 72.7 on a non-GAAP basis. We are getting back to those low 70s, right? One of the big bearish thesis was that gross margins was going to start to hit that low 70%. And I actually even have an image here, right? So we were saying gross margins were in the high 70, 75, 78, 75. And then we started to see a decline. Many were expecting, this is a one-time charge from China last quarter, but many were expecting gross margins to kind of go into the lower 70s and get closer to 70s and maybe even hit the high 60s. Right now, we did see that that's not going to be the case. 72.7 in quarter two. And for quarter three guidance, they guided about 73.5 on a non-GAAP basis. And they mentioned that for the end of the year, they expect to exit in the mid 70%. So that's somewhere between 74, 75, 76, in my opinion. So gross margins should not be seen as a bearish story anymore. We're seeing strength there. That tells me that there's really not much competition. They're able to sell things at a great price. There's not much of loss in pricing in any of the kind of components or materials that they have. It solidifies that strength of Nvidia's moat at the moment. Now, revenue guidance for the upcoming quarter was also pretty strong at $54 billion, plus or minus 2%. The crazy thing is this company has not assumed any H20 shipments or China shipments in the outlook. They mentioned this could be an actual $2 to $5 billion if they kind of get all the licenses that they've kind of requested. So this could be a 56 to 59 billion quarter, which is a lot higher than the market was expecting. So I personally believe the company is respecting its investors and not putting any guidance that they don't know the actual answers to right now. The China market still has a lot of issues with the Trump administration, with the government in China, with the customers and everything there, that they rather not give us guidance right now as it's so many variables. So the best thing for them, and I respect this for them, they gave us numbers that they know they can achieve without the China space, and then the China market is additive. Now it's crazy, $54 billion without the China market. That is bonkers, crazy, crazy. Now, if you are enjoying the episode so far, make sure to hit the thumbs up and the subscribe button. This is the best place you're gonna find any semiconductor and AI news, especially when it comes to Nvidia. Now, a few other things that I found pretty interesting, and this is just a very, very, very light deep dive. I'm gonna do another episode throughout the upcoming days, kind of like the top things, the top 10 things that Wall Street is missing at the moment, because there's a lot of things here that Nvidia mentioned during the earnings call that I think Wall Street is not going to listen to or is missing out on. So again, make sure to hit the thumbs up, and I will be covering that either tomorrow or Friday. It's been a long day for me, so I'm kind of just doing a really small deep dive at the moment. But accounts receivable was $27.8 billion with 54 days sales outstanding, up from 46 days. One of the big things is right now they did not see much cash come in this quarter due to the Blackwell Ultra ramping late in the quarter. So that impacted cash flow a little bit, but that money should be coming in within the next few days. They also mentioned that cash flow from operating activities was $15.4 billion. I was actually expecting closer to 20 billion in this. The main reason they missed this is they did have to pay about $8.1 billion in taxes were paid this quarter. So I completely forgot about taxes. I thought it would be paid in another quarter, but that plus the kind of them not receiving some of the cash collection in Blackwell Ultra made cash flow from operations be $15.4 billion. That's not the worst thing. It's still up on a year over year basis, but I was expecting a little bit more. But the reason for it is not anything to be bearish. It's just good to understand why. Now, I talked about the gross margins. I'm very excited about gross margins. Another thing is we continue to see that data center revenue continue to grow. Now, I have this pretty cool kind of small presentation. If you are a member of the channel, you will get this on the member only chat. So make sure to join. But some of the great things that got me kind of excited as a long-term investor is first, Jensen mentioned that we are at the beginning of an industrial revolution. They see about a $3 to $4 trillion in AI infrastructure spent by the end of this decade. Just this year alone, the growth fueled by capital expenditure is expected to track about $600 billion in data center, coming from both us, kind of the cloud service providers and kind of the enterprise space. Now, next gen. So Blackwell and Rubin are going to be scaling to this $3 to $4 trillion global opportunity. One of the main things is we're going to see millions of Rubin GPUs powering multi-gigawatts, multi-site AI factories. Now, in emerging AI applications, we continue to see that strength with agentic AI, with physical AI. Physical AI robotics continues to grow. We see a lot of great players kind of following in that step. The AI native startup ecosystem. In 2024, the AI startups was funded at about $100 billion. Now, in 2025, year to date, the day year isn't over, it's already been funded by $180 billion. So this is expected to continue to grow and grow. And these startups are ones generating revenues from the AI market and are definitely going to be some nice customers for NVIDIA's GPUs. The China market is estimated to be about a $50 billion opportunity for them. If they were able to address with competitive products, you would expect to grow, say, per 50% per year. So this market is still kind of not forbidden, but not to their biggest strength right now. But if it ever opens up, this would be a massive opportunity. Sovereign AI. The European Union plans to invest $20 billion to establish AI factories. They are on track to achieve $20 billion in sovereign AI in this year, more than double last year. Long-term outlook is just that the AI race is on. And right now, the AI story is just beginning. We saw that $3 or $4 trillion by the end of the decade. Remember, not all of them goes to them. That's just overall capex. But Nvidia is going to have a strong competitive advantage here. So for me, this earnings just continue to solidify that this is going to be a company that has the opportunity to grow. I still believe this could be a market beater over the long term of things, as long as the AI innovations continues to run, and that right now that story is still running. So again, throughout the upcoming days, I will be dropping more of a deep dive, but those were just my overall top thoughts. Take care, have a good day, and see you all next time.